Good day, ladies and gentlemen. In this video, I'm working through an example for the right of use of a motor vehicle. Okay, example 1 says X received the right to use a company car from his employer from 1 May 2020. That's an important piece of information. You need to know when the employee started using the company car, because it forms part of your calculation for the value of private use. So you can immediately count the number of months from May to 28 February 2021. That should give you 10 months. The employer acquired the car on 1 May 2018 at a cost of 350,000 excluding VAT. There's two important pieces of information there. The acquisition date is important because we're going to use it to determine if we need to depreciate the determined value. If the gap between when the employer acquired the car and when the employee started using the car is more than 12 months, we need to depreciate the determined value by 15% each year. So you can already see here the employer acquired the car on 1 May 2018, gave it to the employee only on 1 May 2020. There is a 2-year gap there, so we'll have to depreciate the determined value by 2 years. It can happen, and it does happen, that the employer acquired it on 2018, gave it to another employee to use as a company car, and now it's giving the car to X to use. You would still have to depreciate that vehicle based on the number of years. The second important information here is that they've given you the cost to the employer. When they acquired the car, it was 350,000. It's the cost excluding VAT. We need to use that amount when we're working out the determined value. It's the cost including VAT that we will use for our determined value. And the VAT rates that we're going to use is dependent on the acquisition date, when the employer actually acquired the car. Remember, the VAT rate changed on the 1st of April 2018. So here, because the acquisition happened on 1 May 2018, we know that we'll be working with a 15% VAT rate when we are adding it to the cost. Then you're told the cost did not include a maintenance plan. So that means at acquisition, there was no maintenance plan taken out. And what that means for our calculation is that we will then use the 3.5% in calculating the value of private use. X pays 300 rands per month for the right of use and is responsible for all petrol and maintenance costs. Right? So the 300 rands is what he is contributing, paying to the employer for the right to use the car. We will consider that when we're working out the cash equivalent. Remember, the cash equivalent is based on your value of private use, and then you reduce it by any contribution from the employee. So you'd have to take into account 300 times 10 months that X would have contributed, and it reduces the cash equivalent, which means it reduces what eventually gets taxed in his hands. He's responsible for all petrol and maintenance costs. That is good news for him, because it means he will be able to claim those reductions. He'll be able to claim all 3 reductions because he's the one paying for petrol, he's the one paying for maintenance costs. Petrol cost him 4,000 rands and his maintenance costs were 25,000 rands for the 2021 year of assessment. You'll see that a lot of questions tell you the petrol cost, but what you need to remember is when we're working out the reduction for the fact that the taxpayer paid for petrol, we use the deemed rate. The deemed rate which comes from the travel allowance tables. So you'd have to refer back to the cost of the car, including VAT, look up where it's sitting in the brackets in those in the travel allowance table, and use the deemed rate per kilometer to claim a reduction for petrol. You don't use the actual petrol cost that the taxpayer has paid. On maintenance costs, we're happy that he's actually incurred the cost himself. Practically, you'd have to make sure that the taxpayer also has the evidence to support that he incurred those costs. Then he can claim the 25,000 rand, but he can't claim all of it. We would then have to apportion and see how much of it he can claim based on his mileage. X kept an accurate logbook. That is an important requirement to be able to claim the reductions against the value of private use. If you don't have an accurate and a correctly completed logbook, you can't claim, you can't reduce the fringe benefits, the value of private use. He traveled a total of 30,000, of which 10,000 was private. So then we know 10,000 was private, which means 20,000 was then his business mileage. The required is then to calculate the amount that will be included in X's gross income. So we know fringe benefits go into gross income in terms of special inclusion, paragraph I. Now we have to work out the value that is going into gross income. Okay, so the first step is to work out the value of private use, where we look at the determined value. We've got the cost of 350,000 that was given to us. We want to include VAT, so we'll multiply by 1.15. Then you want to depreciate it, because we could see that the employer had the car for 2 years before they gave it to X. So you would then reduce your cost plus VAT by multiplying by 85% for 2 years. And that has the effect of depreciating that cost by 15% each year. So your reduced determined value is then 290,806 rands. We've got the option to either use 3.25 or 3.5. The information said there was no maintenance plan when the employer acquired this car, so the correct percentage to use then is 3.5%. Then you have to remember that this percentage is a monthly percentage, so you have to look at the number of months that X used the car for, and he used it from 1 May 2020, which is 10 months, so you'd multiply by 10. That would then give you your value of private use, which is 101,782 rands. That's the first step. It does not end there. You would then have to consider the reductions that are available for him to claim to reduce that amount. So the first reduction, you take your value of private use that you've worked out from the previous slide, which is 101,782, multiply that by the business mileage that he's traveled, which was 20,000, divided by the total mileage of 30,000. That gives you 33,927. The second reduction we can use because we know that he was responsible for the maintenance costs, which was 25,000. Those are the maintenance costs that he actually incurred during the year. So we would take the 25,000, multiply that by the private mileage that he traveled during the year, which is 10,000, divided by the 30,000. So that gives you 8,333. Then the third reduction is for the petrol. He paid petrol costs. We were told he paid 4,000 rands, but we must use the deemed fuel rate. And that means you go to this table which shows you the fixed cost, fuel cost, maintenance cost for a car. The value of the cost of his vehicle, of the employer's vehicle, is 350,000. You add VAT to that. It places you in this bracket here on the travel allowance table. And we want to then use the fuel cost rate per kilometer of R1.47. So that's what you would use for the third reduction, R1.47 multiplied by 10,000 being his private mileage. You would then get 14,770. So you can basically reduce his value of private use by those three amounts. So to work out what eventually gets included in his gross income, that is the cash equivalent, you would start with the value of private use of 101,782 minus the first reduction, which was the business use component, minus the maintenance cost that he paid for, minus the fuel costs based on the deemed rate. And we must still remember he paid an amount to the employer for the right to use a vehicle, so it would be minus 300 times 10 months. Ultimately, the cash equivalent that is going into his gross income will only be 41,752 rands. And that's the end of the video, and hopefully that answered some of your questions on how to work out this fringe benefit. If you have further questions, if there's something you don't understand, please do post a question on the discussion forum and it will be attended to. Thank you.